What's up? What's up? What's up? Oh, terrible DJ. Sorry about that. Terrible DJ. My bad. I just micro specialize in the Bitcoin price. I look at it 17, 18 hours a day so you don't have to. Terrible DJ. I love to dance. Folks, thank you so much. I am Big Chad. It is a day. It's Saturday, June 25th, 2022. I'm just happy to be alive. I'm happy that you're here with me on a Saturday night. We're just hanging out. We're doing the same thing. We're watching Bitcoin. We're part of the cryptocurrency space. So thank you for joining me tonight. Let's get the let's tone things down here. It's time to get serious, right? I'll tell you, I'm a terrible DJ. Sorry about that. It's time to get serious, right? Trading serious, right? We can't have fun. You can't have fun. Actually, you can have a lot of fun. And it's a lot more fun when you feel in control. When you feel like you're in control, you're defining your risk. You're kind of managing the situation. You're managing the moment. We're going to talk about that. We'll get to that in a minute. So, folks, please do reach out to me. I do wash the jacket. How often do you wash it? So, listen, I only use the jacket. I only YouTube stream every 3 weeks. Because I'm doing Bitcoin.live. I can't just do this all the time. I'm giving it to Bitcoin.live. That's what it's all about. Let's just get that out of the way. Add screen. All right, I'm on Twitter. I'm at Big Cheds. Academic observations about price, trading psychology, risk management. I am the author. Trading Wisdom. 50 lessons every trader should know. It's had unbelievable, reviews. So thank you once again to everybody. 4 formats. The audiobook's pretty cool. But if you don't want to pay for it, I've got your back. Go to my YouTube channel at Ched's Trading, go to playlists, click on Trading Wisdom, 50 lessons every trader should know. I'm doing every lesson for you for free. I'm going to put the whole book out for free. I've done 15 of the 50 lessons every 4 weeks, maybe 3-4 weeks. I'm doing a new lesson. You folks are crazy. There's only like 1,400 views. Let's go to videos. Like, you folks are crazy. There's only like 1.7K views on this video. All right. The book is unbelievable. It's free. Like, go watch these videos at a very minimum. If you want to learn how to trade, go to the playlist, click on tutorials, masterclass TA webinars. This is going to teach you moving averages, level to level trading, understanding your risk. You have to watch all 3 of these. And if you're really serious, you're ambitious, you actually want to stop, failing all the time. Thank you so much. I'm just trying to do my thing. Just having fun. There's a long way to go. When new book, I'm actually working on it right now, right here. This is book 3. This is the second printed draft. I'm getting ready for the 3rd printed draft. So later this year, it's going to be good. I'm working on it. If you really have that ambition, check out the quick market updates. There's a lot of really good stuff in here as well. So thank you for watching. I'm going to quickly check the chat room and say hello to everyone. We've got a lot of people who come each time. There's new people. Just, thank you for coming. Let's see. And there's one more thing. Let's move that right over there. And I would be loath to not mention, I am a founding analyst at Bitcoin.live. Bitcoin.live is the best-in-class educational platform for crypto. Twice a week, I do long-form, full market updates. Take chart requests. I haven't missed an update in like 3 years. I'm on vacation. I'm sick. There's an asteroid about to hit the planet. I'm putting out an update, so I encourage you to check it out. And I'm part of a world-class team, an unbelievable team. It doesn't get any better than the folks at Bitcoin.live. Something I'm really proud to be part of. I'm going to check the chat room. I'm going to talk about Bitcoin price. And then I'll just, first of all, thank you for watching. Thank you for listening and letting me kind of ramble through all that. From Australia, it's great to see you. From Ukraine, hello from Sweden. Nice to see you. Hi again, wherever you are. I don't know where you are. It doesn't matter. So just kind of catching up a little bit in the chat room. I don't have a team. I don't have like a publicist. I don't have a mark. It's just me. I'm just like a guy who I've survived somehow. I've survived a lot of stuff. It's made me stronger. I'm trying to pass on that. Right. So I don't, I can't read all the chat, the chat. So if I missed your chat, I'm sorry. But I'm doing my best. I really just check out the YouTube tutorials. That will get you started. That'll help you out a lot. Church of Eight Wheels. So I mean, okay. Let's see. Let's do real quick. Let's see. Let's see. Where is it? All right, let's try that. Here's the original song. This he's saying is way better. So let's try it. Okay. Real quick, we're just gonna get this out of the way. You tell me what's better, that one or this one? Right? You gotta decide. All right. This is what's important, right? That's what's important. This is why you're watching. So you two, just you folks. And I'm just having fun, changing up the music. Thank you. Sound is terrible. Is the sound terrible, folks? Is this sound terrible? I did a sound test before this. The sound should be fine. Please let me know. I'm gonna get right into this. I don't want to waste too much time. We've already wasted quite a bit of time. We're looking at the Bitcoin chart on the daily chart right now. We're looking at Bitcoin based on the daily chart, and we're looking at the price interacting with the EMA 8. It's an exponential moving average. That means there's more price weight given to the most recent candle, as opposed to a simple moving average, like the MA20, the middle Bollinger Band, right? The 20 period, 8 EMA. I think about it as primary resistance or primary support. I'm going to invert the chart, and this is an uptrend, and this is coming back. I bet 10 out of 10 of you bulls would say that's a bull pennant. I see a bull flag. I see anything whatever you would call it. You'd see this, and then you'd see that. You see, oh, that's a bull, and then insert name, right? So when you're seeing that in inverse, you have to recognize that. All right. So you say, okay, it's a nice little move, kind of probably a rising bearish wedge interacting with the EMA 8. And, the price does this. You've been trading for a while, so you understand kind of level to level trading. You've got kind of a bed of support. You've got kind of a bottom of channel. You got a kind of an upper part of the channel, right? Lower high where the price is rejected here, the evening doji star, right? Go back, watch old videos. You've got kind of those ranges established. And then you break the range and you kind of ride that lower Bollinger. And then you kind of bounce from that lower Bollinger, right? And so it's a question of kind of the manner of which that happens. And when you get like the Jan 24 bottom, the Feb 24 bottom, you get a better reaction off these like longer, lower shadow candles. Even here, the long leg doji from May 12th had even a longer, big lower shadow. This is okay, but we've had kind of a minor reaction so far, and we're just bouncing up into the 8 EMA. So we're waiting, we're watching. We understand the price has rejected at the daily EMA 34. We understand that we're measuring almost, the strength of the mean reversion. That's all we're doing. We're kind of data scientists. We understand it. We understand it's a bear trend. We understand within that larger bear trend, we'll have smaller bull trends, attempting to shift momentum. And those are those mean reversion rallies, right? We kind of understand that, and we understand how we're almost measuring those, like a I don't know, a geologist or whoever measures earthquakes. I mean, you're looking at it on a Richter scale. So can the price interact with this level? Can it close above this level? What does it do next? How does that price interact with prior lost support levels, stuff like that. So you're kind of just marking up the chart, and that's how you're approaching it. It's a trend. You got to dissect it, right? You can't just sit there and feel helpless all the time and say, I have no idea what's going on, and nobody can predict what's happening next. Like, you have all this data in front of you. You have the chart, you have the trend, you have how it got there, you have how it has interacted with levels in the past. Those are things that allow you to make an educated guess. It's the only thing you can do is make an educated guess, right? You can make the best guess based on the best information. And then what's so important to go with that is knowing when you fail. When that idea fails, this thesis has failed and I'm out. Boom, I have 80% left, or I have 85, 90% left of what I put in. Great, okay? It's not perfect, but I'm preserving my capital. I'm ready for another try, and this time I'm probably gonna have a smaller size, understanding I need experience, right? If you're struggling, start betting less. If you're struggling, cut your position size in half, cut your watch list in half. Do those two things and come back to me and let me know what happens. So we have the price in kind of a classic consolidation phase. I'm going to walk you through some tweets. And once again, thank you for listening. I kind of went on a spiel there. Good evening. Good to see you. Thank you, Lord Samurai. Wisdom with Cheds. I'm just having fun. Listen, I've been there, right? I've somehow survived. I've made it out of the pit. And, anyway, let's not get too poetic here. We're going to talk about, so June 16th, sentiment like price can turn around. So, real quick. I sometimes, when I do these YouTube updates, I'll try to explain some tweets. One thing is people say is you're too cryptic on Twitter, Cheds, and like part of it is I'm trying to encourage you to learn and to Google things. I can't explain everything every time. Like I can't in every tweet explain every pre-qualifying condition for you to then understand what I'm trying to infer or kind of what observation I'm trying to make. You have to put in that baseline effort yourself, right? So I can't do that. But when I do these YouTube videos, I'm trying to explain as best I can to kind of give a little more context. Hopefully this will be of value to you. So thank you for watching that. 521 of you. Sentiment like price can turn around quickly, but must bottom first. Too much enthusiasm, hope still in the equation. So this is me kind of opining, as you might say, on the 16th. So somewhere in this candle, right? At some point in this day, probably maybe in the middle, I guess, I'm basically saying that, there's still too much hope in the market. And we're trading at just above 20K. And we haven't quite broken it yet. But I've just been talking about it. It's likely to break. I think we probably will break. Starting back in March on Bitcoin.live, I started talking about. Let's go to the other one here with the longer MA200. I started talking about, potentially, we lose 30K. We're testing 20. If we, but we'll probably break it. And I kind of have always been talking. I've been talking about the price heading to this range since then. And then in April, I started talking about it on Twitter where I said, the run from 12K to 100K is going to be amazing. And it was a provocative tweet. And I was spitballing a little bit. But, the first part was more confident than the second part. I've had people ask me, well, tell me, what does the 100K route look like? I can't tell you that until I see a bottom form per se. But I could, but it's like a very low degree of confidence. But the first part's a lot easier to see because that's your key pivot. I think it definitely gets to that range. And I've been talking about it, break the 200. We have a break the 200 because we didn't approach it in a violent enough manner, in kind of a rapid enough manner to kind of bounce off of it. You need that kind of elasticity of the price. You need to take advantage of that price elasticity. Where rubber band, you pull it back so far, it can really snap. And that's what you need to do to reverse a trend, and that's because we've had such an orderly sell-off in Bitcoin. With just that one example of us trying to bounce and getting rejected on the daily MA200 underside. We've talked about it a million times. So you need that. And so I've been saying, look, we're gonna head lower, given momentum. We lost 30K. That was a big deal. And so that's why you have to manage your risk. And that's the whole point. If you bought in, based on 100K, at some point up in here, there were all these times to sell. You had plenty of time to sell. So now you're a holder, you're an investor, you're not a trader. That's fine. But if you're going to tell yourself that you're a trader, if you're going to tell someone else you're a trader, if you're going to pretend to be a trade needs an idea, and then it needs to know exactly when that idea is invalidated, because that's when you leave. That's your stop loss. That's your failure point, and you need it. And if you're not using it, you have to stop right now and pull all your money out and kind of hit the books. All right. So 20K was heading to 20K, probably head into this price cluster, kind of in that 10 to 12K range. So I just started talking about that. So we're back on June 16th, and I'm basically saying, but kind of with that is the idea that, and this is a repeat I've talked about 100 times. Hello from Honduras. Thank you as well. Hello to you as well. Thank you for saying that. Nice to see you. Sentiment, right? You need sentiment, right? Sentiment will help the price bottom, right? And if you kind of look at the history of Bitcoin, we're heading towards one of those major points where it's like a big major secular long-term bottom is coming. And whether we're half away there, 2/3 of the way there, or 80%, something like that is remains to be seen. But it corresponds with a sentiment bottom. And if you look back here, I had a tweet, where I said there was 3 words: too much enthusiasm. And that was a top. You could just like tops and bottoms. And then around here, I was a little late on this bottom, and people have pointed that out, and that's fine. I mean, I didn't get 28K, I got 33K, 34K. Like that's fine. but sentiment was there in terms of like you look for kind of people giving up. But really having been through these prior bottoms before, and through my own experience, sentiment will lead, and you'll see people saying that Bitcoin's done. Like we haven't seen it yet. I just don't feel like we've seen that in sentiment yet. And I follow sentiment, and it's helped me kind of spot these tops. You've seen it on YouTube, Twitter, Bitcoin.live. I mean, sentiment's deadly. So, there's still too much hope in the equation. Sentiment can turn around quickly, but it must bottom first. So I think everyone, yeah, I get people who are buying and for whatever long-term reasons, but sentiment has not bottomed yet. You have to be aware of that. Hey, thanks, buddy. Hey, thanks you, man. Thank you, Khalid. Appreciate that. Um, let's see. Everybody else just checking in the chat rooms. So why do you good question. Why do I ignore the blocks and order flow? Because those are outside of the price. If those things are important, I'm going to see the price move. I just follow the price and I look to see what the price does with the key levels. Your job as a technical analyst is to identify the trend and then ride the trend and make profit while you're riding the trend. And while you're doing that, you're looking for signs of trend weakening or trend strengthening. And that's how you decide to increase or decrease your risk. It's just that simple, right? None of that matters. I don't look at anything outside of the chart other than sentiment. Sentiment is the only thing I look at outside of the chart. And I'm sure that you could say that's some cognitive dissonance. I'd say, okay, I'll get that. Because how can I ignore macro? I'm aware of some things, but I know I don't have expertise in them. So I at least consciously do not draw kind of conclusions on those things. So yeah, sure, they're part of the soup. But I really just look at the price and I look at sentiment, right? So let's continue on. So me basically saying back then, right, June 16th, somewhere, somewhere in this channel. And by the way, thank you for listening. I did a spaces earlier, almost 3 hours. I had some great guests as well. Check that out on Twitter. So I'm basically saying we haven't really bottomed with sentiment. We hadn't broken 20K yet. I felt like we were going to at least break 20K. And I said here on June 16th, later in the day, this is a couple hours later, you better figure out quickly if you are trading or investing here, right? You gotta figure out trading. Love from Jordan. Hey, thanks, bud. Appreciate that. And good morning to you as well. Thank you as well. Here you go, trader or investor, right? So that's the thing. You have to decide if you're trading or investing here. What I mean by that, when I put this out, I'm basically saying we're about to we're about to take taking a ramp off the highway. We're about to exit the highway. We're about to make a change. We're about to turn here. Breaking 20K is a paradigm shift, right? We break 20K, we're probably going to go to low teens. We haven't done it yet, but it's the same way. In the same way we broke 30K, it meant we were almost definitely going to test 20K. We're kind of in that paradigm. And I'm basically saying, like, if you got to decide, because a lot of people were loading here 22, 20, 23K and loudly, and I got it, right? MA 200, I get that. But I think given momentum was a little premature, and you have to decide, because we're about to dip below 20K. This is what I'm saying, more or less. We ended up dropping to 17K, and sure, we had an initial bounce. We're close to that those low 20K levels, right? We haven't quite broken down yet. Per se, but you need to decide. And this is basically me saying in kind of trying to say in kind of a clever way, we're at a turning point in the road. We're at a turning point. This is we're at like a key turning point in the road, right? So that's what I'm saying there on June 16th, later in that candle. Now I said, this is just whatever, I was talking about before we broke 20K on the way up. How do you plan on celebrating it? Whatever. It was just whatever. It was like a couple days before we broke 20K. So it wasn't like a genius call or anything. But I was just, hey, same question now in reverse. And it just felt timely. We're about to break 20K on the way down. We haven't done it yet. We're at 21K, whatever it is. June 17th. Following day here, we got that doji. People are calling inverted hammer. We're going to bounce. And I'm, talking about inverted hammer, 2/3 bearish continuation, upper shadow. All that stuff. And, and we eventually continue lower. But the question is, how are you going to feel about breaking 20K? And you have to preparing people. and you still have a lot of people literally you're at 21K, 22K, you still have people saying we'll never break 20K. And you were right there, you know? So that was like a big deal. That was a battle that was going on. It's a battle like for the psyche, right? Of the market, right? My good morning was on point. I mean, it's just a good morning. I don't know how it could be off point. I just literally woke up. I'm feeling good, and I wanted to, say what's up to the peeps. So, I don't know. I don't know how it could be off point. Um, but let's see right there. So the question is, but you still had that was a big moment. That was a big pivot point, right? Are we going to break 20K? And we did. We bounced off 17K. Kind of, we've been drifting back, and as I said earlier, we're right at the EMA 8, likely in a bearish continuation pattern. So that was, and now we have, here we go, boom, June 18th. The next day, boom, notable breaks 20K for the first time. So we did it since December 2020. That was a big deal, right? First time back below 20K. You have to go all the way back, right? Since December 2020 on the way up, right? Right before that move. That was a gorgeous move. Can we just kind of like step back and say what a move? 20 to 60K, 30K, 60, 60, 65, 30, 69. I mean, unbelievable, right? And we're back to 20K. There it is. Notable first time, right? Since December 2020. So now I'm kind of just talking spit here. I'm just whatever. See people tweeting about RSI, and it just bugs me because I've seen this. I see this every time. I see it in every downtrend where somebody who just refuses to admit like they were early, or that like refuses to recognize it's a downtrend, is like just like up RSI, boom, we're under 30, it's time to bounce. And I talk about the fact that like fear and greed. Okay, here we go. Fear and greed. I said, first of all, I said there's no single indicator that costs people more money than RSI. Almost everybody uses it. How did I survive? I bet less. First of all, I blew up my account like 4 times. I've like zeroed out accounts at least 4 times. I could just, talk about. But since then I survived by betting less and managing my risk and defining my risk. And all the stuff I talk about. I talk about so RSI, right? So everyone uses it, but they use it the wrong way. Like, this isn't the first time I've addressed this, so it's not like I'm revealing anything or kind of breaking ground here. But when something's oversold, right? How do you become oversold? Right? RSI is a great way to get trapped. That's a great point. How do you become oversold? You become oversold by being bearish. And trends tend to continue. A bear trend is likely to continue. So, I don't want to be long something oversold. That's like me play. I don't want to play a reversal play. I want to play a continuation play. I want to play a throwback, right? A bullish retest or even a bearish retest that I'm fading, right? I don't want to play a reversal play. It's easy. It's just a quick, it's like playing a slot machine. I'd rather play poker where I can have a skill edge. I'm not going to play some nonsense. That's a reversal play. And RSI just traps people. They don't understand. Like oversold is a reason to sell, not buy. Overbought is a reason to buy. You're buying, you want to buy with momentum. The biggest runs on Bitcoin have come daily, weekly time frame on overbought, entering the power zone, going above 70. So RSI, honestly, my suggestion would be to delete RSI and never look at it. Almost everybody would trade better if they just ignored the RSI. I haven't used it. I don't use it at all. I don't use it at all. It's an easy way to, I want to look at the price. I just care what the price is doing, how the price is interacting with the key levels. I look at volume, and look at sentiment, right? So RSI, and then fear and greed is nonsense. Please don't ever get in a situation where you're letting this factor into you deciding to risk your funds, your hard-earned funds. You don't have just money to play with. This stuff, like, stop convincing yourself you're going to buy the bottom, right? Like, buy a trend and ride that trend. Don't try to guess when a trend is going to reverse, okay? And then here we go, June 20th. So that's my RSI talk, because people were talking about like RSI here and we're due to bounce at 26K. After we had lost structure, I saw people tweeting here to buy an RSI after we were like in the middle or the early stages of a breakdown. And it's like, what are you doing? Okay. Like this, you don't just buy here because the RSI is low. You just lost support. You're below, you're at 26K. You're heading towards that May 12th low, probably going to break it. Maybe you bounce from it. Okay, then you say, okay, it initially bounced, but then especially when you break the 25K low, you're still talking about RSI. Like, what are you doing? Delete it. Stop using it. Focus on price versus key levels. Okay. So June 20th, a lot of bullish sentiment. What is this? June 20th. June 20th. Doji, right? And a doji doesn't matter the color. I don't want to hear it's a green doji, it's a red doji. That just means you don't get it. I say that with love, by the way. The doji is a neutral session. It doesn't have a color. So you can't say, yes, it's a bullish neutral session. Excuse me? Like those two things don't go. It's just a neutral session. It's an indecision candle. Context of this doji was after kind of the big green candle was a temporary stalling, led to the spinning top, pulled back a little bit, and continued. But on that day, I was saying a lot of bullish sentiment, and it wasn't at that point. It was up here at the top of the candle. No, it's right about here. It was right about here. Basically saying, look, we're heading towards the EMA 8. That's before any of this stuff had happened. It was just a lower Bollinger to a below EMA 8 movement. I mean, if you were in this trend and if you just ignored like that, you look at this and say, oh, that's incredibly bullish. You'd probably draw this line, you draw this line, and you'd tell me that it's going to the moon. Okay. Like you have to be aware of just, you're going to have little trends within the larger trends, right? You can do it. You can look at the larger trend, then look at the smaller trend, and then not feel so helpless. You say, okay, we're just a little bounce. We're not even at the EMA 8 yet, where it always rejects on the daily chart. It has to first interact with it, close above it, boom, rejection. So this is the day before. People were calling bottom already, and maybe it's bottom. Okay, let's wait and see. I know what I'll need to see happen first. I've talked about it many times. But at this point, it's like 80-90% reject on the EMA 8. Okay. And then boom, big spot. Here we go. Okay, this is interesting. 4 hour. Let's update on this. 4 hour EMA 8 trying to cross the so this is like so a trend goes down and then needs to go sideways before it can go up. And you get moving averages flattening out. And if you get enough of a reaction is when you can get a cross, right? You don't want a moving average cross in a sideways market because you need a trend to reverse. That's the point of a moving average cross. We've done this before. If you look at Bitcoin on the way up to 64K, I've done this kind of in other instructive videos where you can just see where let's get rid of that. The green and the yellow, where on the consolidation periods where it's doing a bull flag or it's doing whatever it does, and that's the buy the dip. Excuse me. It doesn't cross. It doesn't cross. It doesn't cross, and boom, it crossed. Came back and crossed. So we had talked about it at the time to kind of watch these moving averages, signs of trend weakening. And I'm talking about how it was a big spot here on the 4 hour. And you're looking to see if the trend can bounce here. So it looks like it has crossed. Let's get rid of that real quick and get the MA50. So we are crossing. And it's just kind of, not a big movement from it yet, but that definitely is something. So this is an opportunity to talk about, Cheds, this is a head and shoulders. What are we looking at here? So you could define it as a head and shoulders, right? But what good is that to you unless it breaks out or it gives you an opportunity to make money on it, right? Where do you the whole thing is you have to either enter at the failure point, which would be when in this case, it'd be kind of the right shoulder failure right here, or it'd be a neckline break. But how are you drawing your neckline? Is it this diagonal? Well, if you enter here, yeah, okay, yes, it initially bounced off of it, but if you enter here, you have to retest it all the way down. Is it this low here, 21.7, which I think is probably your best case, or the most reasonable yet still a little bit aggressive entry, or is it here? Maybe even to extend the zone here, right? Because that's the top of your left shoulder, right? So when you enter, I try to only play head and shoulders with a horizontal neck baseline. And I've talked about this. And this is just a messy setup for me. I don't mind if I like miss this little messy setup. I'm gonna play the larger trend. I'll know when the trend reverses. Like the price will tell you. And I'm looking at the daily chart. Looks like a bear continuation, right? Looks like a bear continuation. Bear. I could draw a bear pennant. I can draw a bear flag. I can draw a bear rising wedge. It's just still so far kind of a minor relief rally. Got the volume trend, right? Standard volume trend, which means this channel is like 1 to 2 days from being done. We are 1 to 2 days from this making a move. It's not something you should be surprised at. This is all here for you to study and learn. Bitcoin's giving it to you, right? It's trading clean. It's been trading clean for a long time. So EMA 8, that's a big spot. It's bounced, but I'm still sticking to the larger trend. This and boom, okay, whatever. This is me just saying, look, we rejected right off the 8. All right, good. So that's a good rule of thumb is to assume any counter trend rally will fail until it closes above. All right, any counter trend rally. We've closed above it a little bit, but like, does it really look like we've started to recapture it, but it's not like super convincing yet. When what you want to see is kind of here. I'll show you what I mean. And in like another alt, you want it to like close up here in this candle where it closes up above it in kind of a more rapid manner. When the moving average is start to flatten out, it's a lot easier to recapture them, right? That's why you look for relative strength, right? In these kind of market-wide bottoming situations, you look at Bitcoin, you kind of see what it's doing, you use that, and then you say, okay, now I understand what Bitcoin's doing. I'm gonna look at what everything else is doing, and then I'm gonna play what the strongest, things are, right? Um, okay, let's see. So let's see. Let me get another example. What has been kind of strong? Sol is initially strong. Yeah, let's see here. Yeah, so like Sol definitely more strength initially. And for me, I'm waiting to see a breakout here, MA50. That's the key lower high. We have the diagonal break. I employ a 2-level filter. Where you want to, for me, a diagonal break. And first of all, a trend line, this ties in with the last tweet, use bodies in wicks for your trend line. That's crazy. It's not, there's no line, there's a trend. There's only a trend. And the line is to alert you to a kind of a generalized price zone. There's a little filter around the line. So I tend to not use a diagonal break in structuring my risking my hard-earned funds. I employ that 2-level filter. I'm looking for kind of the diagonal alerts me as to when I should start looking for a horizontal, right? And here you have the confluence or the combining of that lower high break and the MA50. It's a pretty clean setup. So this would be a nice clean trade for me. We break above 45. But in this case, we see the relative strength. We see the price recapturing the EMA 8 as it's a little bit more violently than Bitcoin. So at this point, we're gonna watch for that daily EMA 34. We're gonna look at we're gonna kind of still understand that looks to be a standard bearish continuation pattern until proven otherwise. You have to go with what is the most likely while being open to the lesser chances, but recognizing what that would be, right? For the bear trend to weaken, right? The bear trend will interact with and close above the daily EMA 34. The bear trend will recapture this lower high here at 21.7, which we're watching, right? That's a pivot. You're looking for something to allow you to manage your risk. You're going to at least observe that the price was rejected here in the first kind of, reasonable strength bounce from the first bounce from that temporary bottom into the EMA 8. That's like a high water mark. You're looking for a high water mark that you can say, okay, well, if I break that later, I'm going to use that to go long, right? And if it gets back below, I can cut my trades. You say, there you go. I'm going to look at that 21.7, right? 21.7, you have something to work with. It's still a high risk, not a strong, it's not a well-defined level per se. But it's something. And then from there, it's EMA 8, right? The MA 20 hasn't really had any play recently with the price. We're still focused on the EMA 34, where it rejected here, where it rejected here, where it rejected here. It's rejected there for months. So you're remiss. You're asleep at the wheel. You're irresponsible if you're not factoring that into your analysis at this point. In the meantime, it's still just a bear trend, probably bearish continuation. We'll see how it plays out. A rule of thumb: most reversal patterns fail. 2/3 of double bottoms fail. All right. So if you see a double bottom, 2/3 of them fail. All right. Um, and most continuation patterns succeed because trends tend to continue. So temper your expectations, but be open to the underdog winning and knowing when that what that where you would see that and know that on the chart based on the information the price is giving you, right? Based on the trend, based on recapturing key levels, based on holding key levels on retests. You kind of want to think about it conceptually in that way. Show me the way. Look, absolutely. Go to my YouTube channel, go to the playlists, tutorials. These are full classes. Like this is free. This is ridiculous. You have these are like this is the I pulled my heart out. I kept a little bit for me. And there you go. Check it out. I think you'll be like, wow, it will just get you started. It will get you started. And if you're thirsty for more, check out the rest of the channel. Maybe that's a good way to wrap up. I'm on YouTube at Ched's Trading. That's where you can get the free version of my book. Trading Wisdom, 50 lessons every trader should know. It's been awesome. I loved writing it and I love the feedback. I want to thank you all for that. You can find it on Amazon. Trading Wisdom, 4 formats, as I mentioned, the free version on YouTube. I want to remind you I am on Twitter. I'm at Big Ched's, academic observations about price, trading psychology, risk management, sometimes free association, some poetry, and some selections from my new book, Trading Quotes, that will be out in a few months. I am a founding analyst and proud to be at Bitcoin.live. I've been doing updates for 4 years. I don't think I've missed one for 3 years, where twice a week, no matter what's going on, I stop and I get it done. We have an unbelievable team of analysts and a great team of members. I mean, these folks have been benefiting from major trend analysis, and we knew the top was coming. We've been playing it accordingly. And I'm just proud to be part of it. So if you're serious about trading, learning how to trade, please consider checking that out. So thanks, folks. Thanks for letting me come on here and ramble. Oh, thank you. Thank you for that feedback. Folks, check out the free version. I mean, thank you so much. Check out the free version. You don't have to buy it, Let's see. Thank you. Excellent. We appreciate that. So, yeah, you have to blow up accounts. You have to make brutal mistakes, unfortunately, before you kind of figure it all out. And that's the sad part of it. So, folks, thank you for joining me here tonight, wherever you are in the world. I do not do these YouTube streams that often because I kind of save my mojo for Bitcoin.live. I put something into this tonight. Hopefully you've enjoyed it. But I hope everybody's doing well. Let's finish it off here with a dance party. Let's go back to an oldie but a favorite here, and see what's happening here. Is that working?